Oliver, you and I are journalists. That means we drink cheap beer. AB InBev, it appears, is going to be drinking some expensive beer. Their latest offer for SABMiller, the second largest brewer in the world, has been batted away. Are they going to come back and bid still more?
I think they will. They didn't rule it out this morning when they went public with their latest offer, which is £42.15 a share. As you say, SAB had rejected a couple of previous approaches, and they have also rejected £42.15. ABI is very keen on SABMiller. It wants the exposure to, particularly to Africa and some parts of Latin America that it doesn't have already. This is seen as the ultimate deal in the global brewing industry. So I think ABI is very keen and might welcome that.
Do you have a sense of what kind of price would get a deal done? How far the bidder could go?
Well, some of the analysts are talking about £45 being the price at which a deal could be done. That I'm sure would be very nice for SAB shareholders. Less clear if it would be nice for AB InBev shareholders.
Yeah, is there a chance? This is sort of the last prize. AB InBev has is built by a series of acquisitions, and this would be the final big acquisition that sort of made them a globally dominant company. Is there a danger here that they pay so much that they actually dilute shareholder value?
Well, they've not done that in the past. They've done very well out of their acquisitions, but their real strength is in cost cutting. And you look at the previous deals they've done, they've managed to beat their targets for cost cutting. And so if this deal's going to work, again, cost cutting will have to be at the heart of it. But they haven't said anything today about how much cost they'll be able to cut out of.
And their last big, truly big acquisition, which was Budweiser in the United States, that was known as a company that was a bit flabby by reputation, a bit free spending. Surely SAB, which is a pretty chiseled machine itself, there's probably less cost to be taken out.
Yeah, SAB already runs a fairly tight ship, so as you say, less cost to be taken out. That said, the guys at ABI who have been running the business for many years have got a very good reputation and could no doubt find some savings, notably in head office costs. Maybe there'll be some savings when it comes to buying raw materials or manufacturing or distribution. So there will be some savings, but perhaps not as much as there have been from previous deals.
Last question then, Oliver. If a price clears this market, are the antitrust regulators going to force the deal onto the rocks?
I suspect that the guys at AB InBev have been considering this, and there will be some things they would have to do. One obvious one is selling SABMiller's business in the US, because they own half of Miller Coors, so they couldn't continue to do that. So that will probably be sold. Potentially also some disposals in China, and there might be a few antitrust hurdles elsewhere. So I would imagine there are certain remedies already kind of under consideration to get it past the regulators. Whether they succeed is not clear yet.
Thanks, Oliver.